morning. Welcome to First Mover. Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning. How's it going? We're seeing a bit of a Bitcoin non-movement here.
Yeah, struggling to get over 36, but no dice.
But we do have some bullish news, more on that. But checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 34,570. Bitcoin is slightly down about 3.7%. And the CoinDesk Ether price ETX index is at 2133. ETH is also down about 2.3%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So that top story of the morning dropped 5 a.m. in Eastern time in New York, that payments giant NCR and Naidig are joining forces to make Bitcoin purchases available at 650 U.S. banks and credit unions. They also took out a full-length ad in the Wall Street Journal for this announcement with the header, Bitcoin for the people. Lawrence, bullish much?
This is my impression of the markets. I mean, it was...
A few months ago, this would have been like a huge deal. Yeah, I just think people have kind of gotten used to this kind of news. But yeah, in theory, it's quite bullish, I would say.
Yeah, it took my mom the amount of time, those few months, that took my mom the amount of time to learn how to use Coinbase. So, hey guys, speed up here.
All right, NCR has ATMs and kiosks in 160 countries. So in terms of accessibility, if you want Bitcoin, this certainly expands ways that you can get it. So... we'll see. The infrastructure is being built.
Sure.
Lawrence is slowly.
There are tunnels under the Hudson that go faster than this. So
you need a lot to impress Lawrence here. All right.
You really do.
USDC, the stablecoin now native to 4 blockchains, could soon be on 8 to 10 more networks. More bullish news, as CoinDesk has learned. It'd be the broadest expansion of the 25 billion stablecoin to date, potentially surpassing the 8 blockchains that support Tether's USDT, the market leader with a 63 billion market cap. Joining us now to discuss is Jeremy Allaire, co-founder, chairman, and CEO of Circle, the pioneering force behind Stablecoin USDC. Welcome to the show, Jeremy. So perhaps you can confirm this news. Good to have you on the show. Perhaps you could confirm this news, and if so, perhaps you can outline the challenges and significance of this expansion.
Yeah, so a couple comments. So Center Consortium, which is the governance organization around USDC and really seeks to build a set of standards for ultimately the kind of global expansion of fiat digital currency models, obviously USDC being the first. Center Consortium sort of certifies different blockchains as having the potential to be chains that support USDC. And Center put out an announcement this morning that it had sort of approved for potential use upwards of 10 incremental blockchains. Now, Circle itself has launched support for USDC on a number of chains, as you've noted, and I think this is just all part of an effort to ensure that the preeminent trusted dollar digital currency standard, which is a really important protocol that a lot of people are integrating with and building on top of, that it's as widely available as possible and on as many important platforms as possible. As I like to say, we want our digital dollars to be cross-platform. Each major blockchain platform is like a platform, and so it's really just underscoring that commitment to having widespread interoperability for dollar digital currency in the world.
Seems to be a theme this morning. Also, Coinbase is taking on the banks, it seems, debuting a savings account product that yields 4% annual percentage yield on USDC stablecoin deposits, and that's obviously higher than what traditional savings accounts can traditionally offer. So is Coinbase going to eat the banks, take away their lunch money with these savings accounts?
Well, I think there's a very big thing happening here, and it's been going on for really on an accelerating basis over the last 18 months, which is once you have a trusted, reliable dollar digital currency on blockchains, effectively capital market functions are being built around that. And so you've seen this incredible growth in DeFi lending markets built around USDC. You've seen a lot of growth in CeFi lending markets built around USDC. And that actually led us, Circle, just 2 weeks ago to announce Circle Yield, which is, it's not a retail product. It's not a savings product for end users, but it's for corporate treasurers. So businesses of almost any size that want to take some of their capital, their dollars, and allocate it into USDC yield markets is a tremendous opportunity to do that. Business balance sheets, financial institution balance sheets are orders of magnitude larger than consumer balance sheets. And so there's just a huge opportunity for USDC yield. We're providing that now today to corporations and financial institutions. And then also just days ago, Compound announced its own institutionally focused yield product, also a 4% USDC yield product, also in partnership with Circle to deliver that using our just announced DeFi API that allows businesses to integrate DeFi USDC yield into their own products and services. So there's a lot happening here. I think our view is that over the coming years, essentially, capital allocation, capital intermediation, various forms of lending are going to be denominated more and more in digital currency. And I think these next generation of crypto native financial services companies are really poised to be major providers of those products.
Welcome back, Jeremy. Just to turn more to the macro view, since the last time we had you on the show, there seems to have been some advances in the U.S. government exploring a central bank digital currency. So I just wanted to turn back to that topic. I guess my first question is, do you think there will be a central bank digital currency, a U.S. digital dollar? And if so, what does that mean for stablecoins? I mean, do you still need stablecoins if there is a digital dollar? Will they be competing? I would just love to hear your view on the prospects for this.
Yeah, I mean, I think there are a few things here. I think the first is we are seeing an extraordinary amount of velocity and innovation in public blockchain infrastructure and in the protocols built on top of those public blockchain infrastructures and private digital currency models that are run within the regulatory perimeter of the United States, who have fiduciary standards that are met within the banking supervisory standards. Those models are going to grow rapidly and proliferate, not just in the United States, but around the world. And that pace of innovation, as noted, is really, really accelerating. So I think the interesting question is, there are certainly research projects, white papers, things like that, to actually build something to be operational rather than aspirational, I think is a very different matter. We're seeing very clear statements out of many different quarters, including leadership at the Fed, including, last week, a really key piece published by the New York Fed on their website, making the case that private digital currency models are going to be critically important. You've seen this at the G20 level with the acceptance that global stablecoins are likely going to become systemically important payment market infrastructures. All of this points to very, very robust global development of private sector-led innovation and open internet-led innovation in these fiat digital currency models. There are theoretical things in the future around government-issued digital currency. I think that in the West and in the United States, society is going to really demand the kind of innovation and the kind of trajectory that open technology has delivered for the rest of the internet. They're going to want to see the same thing for advances in digital money.
But does the U.S. government actually need to issue a digital dollar? Like, is this even a necessary thing, or are we fine with the proliferation of private stablecoins?
The central government absolutely does not need to issue a digital currency. There are electronic bank deposits with the Fed, and then you have digital currency innovations on top of that. That's exactly what USDC is today. It sits inside that two-tiered banking system. Virtually every form of electronic money that we've had in the past 75 years has been a private sector-led innovation, where private sector actors are building standards and consortiums for interoperability, whether that's the international wire system, how electronic checks were ultimately scaled to clear through the clearinghouse, what we all know of as the sort of first major consumer generation of electronic payments in the form of mag stripes and cards, and then later innovations like tap to pay, NFC payments, Apple Pay, PayPal, et cetera. All of these are these incredible innovations that have come through the adoption of standards by a wide range of private sector actors working together. There's no reason to think that in the next 2 to 3 years, that same kind of model in private dollar digital currency mechanisms are not going to achieve internet scale with billions of people using them. And so I think that will ultimately obviate the need for the Fed to be even looking at this.
Hi, Jeremy. You brought up central banks and general positive comments about stablecoins, but the Boston Fed President Eric Rosengren, he cited Tether specifically as a challenge to financial stability, and USDC positions itself as the antithesis of Tether. But a lot of people particularly on social media, are concerned about what you list on your attestations as what you call approved investments, as one of the assets, as essentially the assets where the USDC assets go. And people are saying, look, this is no different than what Tether does with its commercial paper, where it's kind of murky as to what commercial paper it owns. So what exactly are approved investments? Who approves it? And what percentage of the assets are in that category?
Yeah, so there's just dramatic differences between the way that USDC is governed and regulated, and the fiduciary responsibility that comes along with that versus something like Tether. So just to start, and this is, I think, that most people don't really understand, USDC exists under a regulated regime in the United States. It exists under the rules of electronic stored value and money transmission. Circle is licensed and is supervised by banking supervisors throughout the United States. We are audited by top global accounting firms, and we're audited against our compliance with law. Those regulations, which by the way include regular government examiners coming in and looking at the books and records of the company and ensuring that we are in fact in compliance with all of those supervisory requirements. That's just like a level of just, first of all, fiduciary accountability that is just completely lacking in a system like Tether. The second is that if you actually look at it and understand it, those laws are the same laws that govern the $35 billion of balances that are held by PayPal, or all of the dollars that sit with Square or Apple Pay or Stripe in all of their platforms. It's the exact same regulatory framework. So we live underneath that. Within that universe, we are basically constrained from a consumer protection perspective to ensure full reserve and effectively complete liquidity at all times. And so there's a very, very narrow set of permissible financial instruments that are able to be held. That is a fairly narrow and restrictive set of covenants that we have to follow, or we're breaking the law. And then even within that, Circle operates in an even more narrow, more bounded, more conservative posture. And that's something that actually we set as a set of standards with Center Consortium. So that we're sort of saying, okay, here's what the law allows for regulated financial institutions that are doing electronic money in most of the world, including the United States. We're going to do something that's even more conservative because that's really critical to really building that trust around a digital currency model like USDC.
Yeah, so I mean, I guess some of the concerns is what exactly is in that list of approved investments. Would that include corporate debt, for instance? And if so, what grade, who grades them? And also just how much cash is actually there? Yeah,
so we have a mandate to obviously always ensure that 100% liquidity and shock test that, et cetera. I think anyone can go and look at the laws. And so what I would encourage you guys to do and others is to actually go see what is allowable and understand that we're very much more conservative than that. And what's important is that this is a regulated financial infrastructure, and we are held to an accountability there. If you go on crypto Twitter, you have people who are speculating, oh, this is fractional reserve, or these guys are doing this or that. I would be in jail if that were the case. I have got government examiners, public auditors, and all these folks that are holding us to account. And the other thing I always want to reserve people to remind people is that the dollar balances that you hold with your Chase account or your Bank of America account, et cetera, those are fractional reserve dollars. You don't actually have a dollar there. You have an IOU, and then they're taking that and they're rehypothecating it at a 10x leverage. That's what banks do. They create money. We're building a full reserve model that is built within the highest level of prudential standards that exist in the world in the U.S. regulated banking system. And we've been doing that consistently and holding and publishing attestations from top accounting firms for 3 years straight. And no one else can claim that.
So to allay some of the concerns, I mean, can you at least give some examples of what would be counted as an approved investment?
Yeah, absolutely. I mean, if you look at it, it's obviously cash. It's government treasuries, those types of short-term instruments, and those are a huge component of this. So we don't break out the actual individual line items in USDC reserves. But we do is obviously publish exactly what we're required to do. And we make it very clear that we're holding ourselves to an even higher standard.
Fascinating discussion. Yeah, everyone is interested what is exactly backing.
Yeah, I mean, they really should be. I mean, obviously, electronic money regimes exist all around the world. We paved the way to become one of the very first crypto electronic money issuers in the world. We've been doing that since 2014, working closely with regulators on that. This is obviously becoming really big, from 4 billion to 25 or 26 billion in a short period of time.
One last question, if I could just inject it there really quickly. So, and this kind of relates to what I was talking about before with Coinbase. They're offering this annual percentage yield. It's a little less than what other crypto lenders are offering at around 8%. And the reason why is that Coinbase is offering a comparatively lower yield because it doesn't lend to identified third parties, which makes everyone wonder who are these identified third parties? I don't know if you could weigh in on that.
Yeah, so I don't know how they're defining that as well. I'm not sure exactly what that means. What I can tell you is that with Circle Yield, that is an institutional grade product. It is a regulated product. It's actually the first, crypto yield product that is regulated by a significant, financial regulator. It's also a fully secured product, so that the USDC that is lent out through the platform is over collateralized on our platform, which is very, very significant. And then it's ultimately going that is lent out through exclusively high quality prime institutional distribution. And so our distribution is obviously and lending out is with kind of very high quality institutional borrowers on the other side of that.
All right, Jeremy, we've got to wrap it up there. I mean, we could discuss at length, I'm sure, but thank you so much for joining us this morning.
You're welcome. Thank you for having me. Have a great day.
Great.
Yeah, bye-bye.
That was Circle CEO Jeremy Allaire. Coming up, checking in on Asia and the crypto markets update with Fidelity Digital Assets.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers from around the world. Together, we will tell the global story of decentralized finance. Join us for this virtual event series as we stop in Nigeria to dive into the movements that are disrupting markets and changing communities. Register today.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, June 30th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, sports and crypto. NFL star Tom Brady teams up with FTX. Blockchain analytics demand soars. And a look at part 3 of our special series exploring China's big bet on blockchain. Let's get you up to speed from Asia to the world. NFL star Tom Brady and his wife supermodel Gisele Bündchen are now shareholders in Hong Kong-based crypto platform FTX. It's all part of a broader multi-year deal with the exchange that will see Brady become its ambassador, while Bündchen takes on an advisory role for environmental and social projects. The couple will also be receiving an unspecified amount of money in crypto. Brady, though, sure seemed excited here, celebrating the deal with a little show of Bitcoin force. It's all part of a bigger picture. FTX has been on quite the sponsorship spree with endorsements from Major League Baseball to its $135 million deal for naming rights to the Miami Heat's arena to e-gaming platforms like TSM. They're not the only ones making crypto moves in sports. Hong Kong-based Crypto.com is also revving up its sports partnerships, announcing a multi-year deal with Formula One for its new sprint racing format. And it will also become the official cryptocurrency sponsor and NFT partner of F1.
Formula One is a sport deeply rooted in technological innovation and with huge focus on performance and speed. So the parallel to cryptocurrency industry is quite clear here. Sports, this is the way you go to instant scale in terms of reach. This is how you expand the crypto industry and help to take it mainstream.
This on top of the company deals already in place with the F1 team of Aston Martin, Cognizant, and the NHL team, Montreal Canadiens. All right, let's take a look at the markets right now, and starting with Bitcoin, which was up just shy of 1% to close at just over $35,200 by 4 p.m. local Hong Kong time at the end of the Asian business trading day. And in the top 10 for cryptocurrencies, most seem to stay above water, though Doge and Polkadot weren't as lucky. They were down 0.5% and 1.8% respectively. Demand for blockchain data analytics is another area seeing huge investment as crypto adoption grows. Last week, Chainalysis announced a $100 million Series E fundraise with a $4.2 billion valuation. And now Singapore-based blockchain analytics startup Nansen has raised $12 million in its Series A funding round. Nansen's CEO, Alex Stefanik, told Forecast that until now, most blockchain analytics companies have been building for regulators, government agencies, and law enforcement. But Nansen says it's for investors and traders in crypto and DeFi.
People realize that in order to navigate these markets, you need to have really high quality data analytics. And so I think that's, if you're an institutional investor or really any institutional agent that is looking at the crypto space, they will want to get really good data. And so there's an increase in demand for it organically and a sign of maturation.
As crypto becomes increasingly multi-chain and multi-layered, analytics will be key to keeping an eye on developing trends. And finally, in part 3 of our special 3-part series, Asia Powers Up, how the region led by China is embracing blockchain and how that will impact the world. This is a series with support from the Judith Neilson Institute's Asian Stories project. We explore how blockchain can impact your everyday life, from how you shop to how you keep track of your food safety.
Alan Chung is the Senior Director of Cybersecurity at the Hong Kong government-backed technology R&D organization. They've just completed a trial using blockchain to digitize and enhance the monitoring and control of imported meats.
The major point of doing this project is to improve the efficiency of safety control of the imported food from mainland China.
You can read part 3, the series finale, and see the full video report up now on forecast.news. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, checking in on Bitcoin for a live look. The CoinDesk Bitcoin price XBX index is currently trading at 34,689. Bitcoin is slightly down about 4.3% over the past 24 hours. And the CoinDesk Ether price ETX index right now is trading at 2134. ETH is also down about almost 3% over the past 24 hours. All right. So, we touched upon this in the beginning, Lawrence, but we're seeing a lot of bullish news in terms of infrastructure being built, more expansion, access to crypto, Bitcoin, etc. Yet the markets aren't so impressed.
Yeah, they're waiting for Elon Musk to have a tweet. I mean, it's pretty much where we are as a society and as a crypto market, that we have these influencers that can move the market, but then when you have infrastructure being built, everyone's like, what? No, who cares? El Salvador is using it as legal tender, and it's like, but did Michael Saylor tweet about it today? No.
He's always he's always tweeting something.
Well, whatever it is,
by Elon Musk in China, basically. Those are the two main factors that seem to be driving price movements recently.
Yeah, and I mean, in all seriousness, when it comes to that infrastructure question, the fact that there are changes to how mining will be done in terms of infrastructure, that I think is weighing on the markets. They're like, okay, but where's this going? If the largest country in the world is frowning on crypto right now, maybe all the other good news doesn't help.
Right. There are a lot of headwinds in terms of what's going on in China. Regulatory uncertainty is always a question mark that weighs down on markets whenever regulators start chiming in, getting a little more strict. And we're also hearing from the Fed, they may raise rates sooner than expected, which, Bitcoin as an inflationary hedge, that loses its argument behind it. So we'll see when we get the big news item that drives the market, which in either direction. Well, taking a look at our global policy and regulation update, we have Nick Day, who is our managing editor at CoinDesk and is also the editor of CoinDesk, the State of Crypto newsletter. Hello there, Nick. So we have Democratic Congressman Bill Foster saying that a crypto backdoor is key to unmasking bad actors. What is he saying here?
Yeah, this was an interesting remark by a member of the Congressional Blockchain Caucus yesterday during a conference. There's really, I think, two things here. So first, and kind of more broadly, we've seen lawmakers and regulators call for encryption backdoors for quite a while now. I think Bill Barr, the former Attorney General, had a whole campaign around putting backdoors into encrypted messaging platforms. So this isn't exactly a new issue that we've seen. But more specifically to the blockchain era, it's kind of difficult to see how that would be, feasible on a technological perspective, especially when it comes to major cryptocurrencies like Bitcoin. Obviously, the open source developers aren't going to be interested in putting a backdoor into aid government law enforcement officials. So, I think the question becomes, will there be, consequences or, efforts to legislate or regulate backdoor in and then impose sanctions for projects that don't comply, or where does this lead? But there are also, I think, some very real concerns around whether or not backdoor could be misused or even exploited by malicious actors. Should one be installed into a cryptocurrency?
Nick, anything else you're looking at this week? I know you had a couple things on your agenda.
The big thing is probably the hearing today. We spoke about this a bit on Monday, but the House Financial Services Committee's subcommittee on oversight will be talking about the crypto frenzy in the trading markets over the last couple of months, and that begins very shortly. I think it's at 10 a.m., so in about half an hour. There's no specific legislation attached to that yet, but it's going to it'll set the tone for what we can see from other hearings and what possible legislation might look like in the coming weeks and months.
All right, Nick, thanks for the update.
Thank you.
I was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter at CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
For all you gamers living in the virtual world, our next guest is launching a virtual mall to sell you virtual clothes. Joining us now is Janine Yorio, Head of Strategic Assets and Initiatives at Republic, a virtual real estate and investment firm. Welcome to the show, Janine. So you're celebrating the grand opening of Metajuku, a shopping district in the decentralized metaverse. Metajuku is inspired by the popular Tokyo street fashion district Harajuku, of course. And anchor tenants include 2 digital-only fashion brands, DressX and Tribute Brand. First off, explain to people what the metaverse is and why do we need virtual clothes in a virtual mall within it?
So a metaverse is effectively a place where people can spend time online in a 3D and immersive environment. So you might be familiar with platforms like Second Life or Minecraft or Fortnite. The metaverses we're talking about today are those that are on the blockchains. They're a derivative of that previous generation. Why do we need it? Well, we've all just spent the past year living life online, both personally and professionally. And there's an entire generation of young people who are spending the vast majority of their free time interacting with their friends online. So it's very natural for both young people and even now more mature people to spend time online, and they want to look good when they're there, whether they're on a Zoom call and they want to wear virtual clothes, or they're actually presenting themselves as their avatar and they want their avatar to be well dressed as well. So Metajuku is a natural evolution of the retail environment that went from 2D websites to 3D immersive retail stores that people can shop in.
This is crazy because...
sorry. Go on, Christine.
Do you think there'll come a day when we'll live most of our lives in the metaverse, just like we spend most of our time looking at computer screens, iPhones, and such?
I think we already spend a lot of our time on social media, whether we acknowledge it or not. And if we include messaging apps like text messages, WhatsApp, etc., we do conduct the bulk of our personal social interactions online. And we have for a very long time done so professionally, and this year thrust everything online. I think the metaverse is a very natural evolution for people to go from 2D websites into 3D stores. So you can actually walk into a store, pick up an item, like picture picking up a shoe or a frying pan, and being able to look at it in 3D. And you can either buy the digital version, which you can wear in the metaverse, or you can buy the real life version and have it shipped to your home. So I strongly believe that this is the future of internet commerce and what the next generation will be doing in order to find products and buy them.
So, obviously different countries are in different places right now, but at least here in the United States, we're sort of just coming out of this long isolation and this long period of quarantine. And it would seem that the opposite would be true. Like what you were saying, it definitely holds true for last year when everybody was indoors and they only had online interactions. But now it's people can finally go outside and finally go to real malls and finally see their friends in person. Why would they choose to have this metaverse experience when they can finally actually interact in real life?
Have you been to a mall lately? Half the stores are gone now. And that's not just because of the pandemic. It's because of Amazon. It's because of e-commerce generally. So it's not as easy to do product discovery in the real world as it was because of external factors in the retail market. And those were accelerated by the pandemic, but the wheels were already in motion prior. That's why we're extremely bullish on retail as a use case for the metaverse. In addition to socializing and conducting virtual meetings, the metaverse is a place to actually do product discovery the way we used to walk around downtown or walk around a mall and find new products. The pictures you're showing are virtual wearables, digital wearables that can be purchased in Metajuku. So if you want that's where you go to buy them.
Hi, Janine. So to touch a little bit more on what you were talking about product discovery, how much of the data are you collecting to figure out whether or not certain design concepts work in physical real estate, such as store designs or likewise clothing designs? How much are you testing out and how much data are you collecting on that? Are you going out to getting young designers fresh out of FIT to see if their products would attract the customer base, or are you going to finding young architects who are just trying to make it in the world with some radical design ideas that the real world won't construct just yet, but maybe could do in the metaverse? Are you guys collecting data on that kind of stuff? Are you going out there and recruiting such people?
So just to be clear, Republic Realm is an affiliate of Republic, an investment platform. Republic Realm is an investor and developer of digital real estate. So think about us the same way you would think about a mall developer like Simon or Related. They're not measuring fashion trends. They're building buildings and leasing them out to tenants. And that's exactly what we do. So we have 2 tenants in our space, and I'm sure they do things like figuring out who the next up and coming designer out of FIT is. You can tell from how I'm dressed, it's not how I spend my time day to day, but it's certainly important to gauging where trends are moving. As far as measuring what concepts work in the metaverse versus the real world, you should understand how early this is. Decentraland really started becoming more popular earlier this year. This is the first of its kind shopping experience. We literally launched today. So we will start measuring going forward, but the data is still very scant. And users are just starting to wake up to this concept. So I don't expect there to be much to measure in the very near future.
Yeah, and real next generation stuff, really very cool. And I like the idea that maybe everything fits well in the metaverse. Thank you so much, Janine, for joining us. Never a problem. Okay. That was Republic Head of Strategic Assets and Initiatives, Janine Yorio. And that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. for All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.